Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everybody, checking in on SPY, IWM, and QQQ. So a wild second half of the day on Friday with a lot of rotation going on, and I can call it rotation in my opinion because we see SPY with a significant pullback coming off of the all-time high. But what stands out to me is obviously the dip buying and the recovery. But when you compare the tech sector, which has been on absolute fire running the market to all-time highs, and you compare it to the financial sector, you see a huge drop in the tech sector and a huge spike, well, not a huge spike, but a very strong bullish move in the financial sector, continuing breakout mode. So very clearly, money is leaving parts of the market and heading into other parts. And this isn't an entirely significant pullback. This is the highest close. Let's see, right now, this is the 5th highest close all time on SPY. So obviously, we did not see too much of a drop, and we did see a recovery. So we're going to keep watching different sectors, see what is seeing strength, what is seeing weakness, and be looking for that rotation and watching to see if the tech sector does continue to sell off a bit. So SPY on the daily time frame set a new low of 241.95. That's an important support level. In the past, we've had dump days, and we've closed at the low of the day, and the day afterwards, we saw no follow-through. The bulls bought that dip. We're going to be watching. Tomorrow's going to be very important here, and it's going to dictate whether or not we see buying of the dip continue or a move back to the downside. So that support is key of 241.95, because if we do break that level, it is clear that the bears have continued momentum, taking out key supports, and then we're looking down at the middle Bollinger Band, which will come first, and then this key level, 240.64, the low of the previous consolidation. So built a level of support, saw continuation. We did build a level of support here that did break, but we did close above that. So support is still intact here on SPY, and that's why I'm so interested to see what goes on Monday and the response that the bulls have over the weekend, seeing which way the money is going, really. And on the weekly time frame for SPY, you look at that candlestick, and you wouldn't know there was a dump day at all. That's perfectly fine for consolidation. Again, we're coming off an all-time high. You could call it a bearish reversal candlestick, sure, but we have to, number one, confirm it. Number two, lose exponential moving average support. And number three, start to break the weekly higher-low pattern. And the most recent one is 235.43, a base of support before continuation. So all in all, on the weekly time frame, it doesn't look like anything happened last week besides some consolidation, which in the end is what did happen. And we're just going to have to see, did this wake up the bears? Are the bears going to jump on this now and start to be a bit more comfortable? Because anybody playing bearish over the past couple months at this point would likely be very, very timid. And we haven't seen many bears around. So IWM, all-time high. Saw that strength on IWM right here back on June 1st. When we broke the lower high pattern, we had our higher low, higher high, follow through, healthy consolidation, inside bar, bull break of the inside bar, breakout, an all-time high. It is a bearish reversal spinning top candlestick with an upper wick of profit taking, indecision up there. But all in all, certainly still in control by the bulls. And this new base of support of 137.81, anything above that level on consolidation keeps that trend with the bulls. So new all-time high resistance is 142.90. Not too much downside, just profit taking from those big-time levels that the bulls saw on Friday with that strong move. So the weekly time frame here shows that breakout. And this this upper Bollinger Band is important because we did reject from it the last all-time high. We rejected from it 2 weeks in a row. We pulled back, we formed a higher low, and then we closed above that upper Bollinger Band to enter breakout mode. So after multiple rejections, that is now support, and the bulls have momentum. QQQ, there's where we see the profit taking. And why is QQQ being hit so hard? Because more than 50% of its holdings are in the tech sector. So huge bear volume. Big time drop. At the low of the day, we took back about 2-3 weeks of upside action with the bears taking over. So support is down at 138.11. Same thing. We didn't see much buying of the dip, but it's all about that low of support and the action tomorrow. Can the bulls hold that level? If they can, we're going to see an inside bar form, and we'll be able to play that inside bar on Tuesday. But it is the potential for momentum to start shifting. This is the most bearish week we have seen in the tech sector. Well, we'll look at the tech sector on a separate video, but this is QQQ. It's the most bearish candlestick we've seen on QQQ since all the way back here shortly after the election. So all of 2017, most bearish week just happened, and the volume is there to back up the bear move. That's another thing. That volume is significant, and volume is our prove-it indicator, and the bears did prove it this week. The question is going to be, was this a one-day event like we've seen in the past, or are we going to see further downside? And again, that key support is 138.11, and that's going to be our guide and our gauge of strength to see whether or not we do see continuation to the downside. So tomorrow's going to be very important, and again, it's because of the dumps in the past that saw no follow-through to the downside, and watching to see how the bulls are able to respond tomorrow, or whether the bears have the bulls on their heels and they're able to strike again with some more downside. So we'll check back in tomorrow with a bit more information. I appreciate you watching, and I hope you have a great rest of your Sunday.